Franco Nevada is the most bulletproof gold stock. So in the last few live stream shows, I've seen in the comments section many of my loyal listeners discussing their different gold and silver mining stock picks and how they are making like 20, 25%, maybe even 30% on their trades. And first of all, congratulations if you've pulled the gains out. Second of all, it's not a gain until you've actually pulled it out and paid taxes on it. But I'm not giving any financial advice, I'm just giving my opinion, so you guys know the disclaimer, but I do want to share my 10 years now of experience covering the resource industry, interviewing CEOs, reading a lot of the best paid newsletters. I get them for free, as well as talking with industry contacts who work in the industry, whether it's CEOs, upper management teams, geologists, etc. And in my opinion, Franco Nevada is by far the most bulletproof gold stock. However, it is almost never cheap. There was a time briefly during the 2008 financial crisis. Franco Nevada, if you're not familiar with the company, it has a very long history. It started off on its own as a tiny little royalty company back when mining companies used to only hold royalties and they tried to do their own separate thing. Pierre Lassonde and his business partner bought a royalty, I think in the late 70s during the beginning of the gold bull market for $2 million. And that royalty that Franco Nevada still owns has produced, and this is the power of the business model, has produced for the only $2 million investment, there was no additional capex required for the royalty. Unlike mining companies, it has produced over $800 million over the decades in cash flow, okay, on one royalty. So if you have a bunch of royalties, you can really hit home runs if you have geology and some luck. If you have good geologists on staff helping you and some luck, and you bet on the right management teams and or the good assets, or there's a surprise discovery like with Fosterville and Kirkland Lake, because remember the original mine at the original mine at Fosterville before Kirkland Lake bought it in Australia was not a good mine, and then all of a sudden they had a enormous high-grade underground discovery. So for those of you who are not familiar with Franco Nevada, it is symbol FNV, Frank Nathan Victor, on the New York Stock Exchange. It has almost a $14 billion market cap. It has a dividend yield around 1.3%, a little bit under that. And its PE ratio is above 58 forward PE. So it is not cheap, but it is extremely quality. Sometimes in life, you get what you pay for. And Franco Nevada has 106 producing assets online now generating cash flow. They have, let me pull up their latest investors presentation here so I can be a little bit more accurate with this. They have 370 total assets. So that's a combination of royalties and streams in gold equivalent, so silver, other metals, and also energy, oil and gas royalties as well. But most of their portfolio is in gold and silver. So they on a percentage basis, Sandstorm Gold has more growth on a percentage basis, and Sandstorm Gold has 188 total assets. For perspective, Franco Nevada has been around for many decades more than Sandstorm Gold, and Sandstorm Gold in only about 10 years has 188 total assets now. So if I'm right about Sandstorm Gold, over the next 10 years or so, if they're not bought out, they have the potential to turn into Franco Nevada with a little bit of luck and good management team, because the business model, I'm betting on the business model, because the business model is by far more efficient than regular primary gold and silver miners. So some of my listeners were talking about Coeur d'Alene mining. And in the short term, maybe you did make 25% trading Coeur d'Alene mining. Congratulations if you pulled money off the table. However, some of you may not be aware of this, and this comes from experience and learning about the resource industry, and also normally pain from losing money and learning to understand the resource cycle, the natural resource cycle. And there is a natural cycle of bull markets and bear markets, of cyclical bull markets and cyclical bear markets, and secular bull markets and secular bear markets, and then sideways markets. But Coeur d'Alene mining, if you go back and look through their annual reports, and I was a shareholder in Coeur d'Alene mining years ago. At one point I made like 400% on the stock, and then I sold it. But it has a 20-year history, and I know there's a new management team, but at some point, and this is not just with Coeur d'Alene, I don't want to pick on just their management team. But at some point in the cycle, the management team will screw things up. This happens with the majority of mining companies. So you cannot, and I repeat, this is not financial advice, just my opinion, but if you talk to a lot of experienced resource speculators, resource investors, people who have made money on resource stocks, you cannot buy and hold through the entire cycle of bull market, bear market, sideways market, etc., mining stocks. Because at some point, the odds, the probability is very, very high that either in a bull market, as prices are going up, the miners will screw things up. The management team at the miners will screw things up. They will not be able to control their costs, so their costs will rise as fast or faster than metals prices, or they will do a really, really bad acquisition at the top of the market, as we saw with a lot of these gold mining companies that did over $80 billion in bad deals from, I think, like 2009 or 10 to 2013, 2014. So there was over $80 billion in bad deals that had to be written off. Or they will do even dumber deals at the bottom of the market, where instead of buying assets for pennies on the dollar, they will dilute the shareholders. So they will do really bad dilution, share dilution, or they will do reverse stock splits, and it will not benefit the shareholders. And so reverse stock splits are only good if the management team does not start the dilution process all over again. And this brings me back to Coeur d'Alene Mining, which, if you study the company over the last 20, 25 years, they have done, I believe it's 5 or 6 reverse stock splits, and they have enormous history of doing massive amounts of share dilution. So you should be a little bit careful. If you have your 20, if it shows on your trading account, you have your 25% up in your stock, and maybe, this is not financial advice again, maybe the share prices of Coeur d'Alene will go higher, but you should keep in the back of your mind that this company, even though the CEOs knew he was there when the previous CEO was doing additional share dilutions and reverse stock splits, I believe the current CEO was a chief financial officer. So this is not a totally outside management team, that they have a history of when things get bad, they lie to the shareholders, they pad their own pockets with stock options and high salaries, and then they gut the assets, and they dilute the stock, and they do reverse stock splits, and they repeat the cycle over again. So you really have to go back and look through the history of these companies, and Coeur d'Alene is also known in the industry as not the best operator of mines, okay? So if the management team and the operational standpoint was run by, say, Pan American Silver or some of these other mining companies or Fresnillo, then some of the mines that Coeur d'Alene owns might have even better margins, more free cash flow. Okay, so I just wanted to stress that for you guys. Talk about Franco Nevada. Franco Nevada was very, very cheap for a very short period of time during the 2008 financial crisis. If you're not familiar, the company re-IPO'd in 2007. So it started off, like I said, with Pierre Lassonde and a business partner, and they raised a small amount of money. They put all their money in. They bought some royalties. There was some success at the royalty company. Everyone thought they were weird because back then only owning royalties was not looked at as a good business, even though now it's a very good business. It's very efficient, very productive. You can control an enormous amount of assets, generating free cash flow with only 15 to 40 employees. I believe that Franco Nevada has only 40 employees and has extremely high cost revenue per employee. That is one of the major selling points of this business model, is the revenue per employee. So Sandstorm Gold, Royal Gold, Osisko Gold Royalty, Wheaton Precious Metals, and Franco, and the two smaller ones, which are Mavericks Metals and Metalla. I think those are the two smaller ones. There's also Abitibi Royalties, but Rob McEwen, who has bashed royalty and streaming companies, which is weird because he owns an enormous stake in Abitibi and then pays himself an enormous dividend, and they're not focused on growth. So it's kind of double standards there. But the business model now is proven, and all these companies that I just mentioned have very high revenues per employee. They have higher revenues per employee than Goldman Sachs. So the business model, I'm not only am I betting on higher gold prices, but this company can do this business model, and I'll talk about Franco Nevada now, can do extremely, extremely well in bull markets, in bear markets, in sideways markets. And so let me talk about that now. So Franco Nevada it re-IPO'd in 2007 after Newmont Mining bought Franco Nevada, the smaller company, and then put a bunch of their royalties into there and made additional investments. And Pierre Lassonde, remember, ran Newmont Mining, and I think he was also the chairman for a long time too. And then Newmont Mining spun out Franco Nevada in 2007. And since 2007, Franco Nevada has had 11 straight years of progressive dividends. So that means despite what the gold price is doing, Franco Nevada has still been able to efficiently grow their business, maintain cash flow or grow them, and then also increase their dividend. And so when you have a business that efficient, a business model that efficient, you have high revenue per employee, you can generate free cash flow in bull markets, bear markets, sideways markets, you can be very efficient and you can return capital to shareholders with either share buybacks with free cash flow, not massive amounts of debt, not loading the balance sheet with debt, or dividends. And so Franco Nevada has drastically, you can see this on an investor's presentation on their website, that they proudly state that they have drastically outperformed the paper gold price and the S&P TSX Global Gold Index. So they've outperformed all the mining stock indices as well. Now, obviously, there's a couple exceptions to this where Kirkland Lake Gold bought the Fosterville mine after the discovery, I believe. So occasionally you'll get a gold mine that's producing that where the project economics drastically improve in a surprise via exploration. But you don't have to have a surprise or a big bet payoff like that. Franco Nevada is slow and steady, and they can just focus. They have a lot of growth in their pipeline. They have 370 total assets, and they have 106 assets generating cash flow. That's enormous diversification for a company. And last year in 2018, they generated, okay, let me get the exact number, $653.2 million in revenue. So there's really good diversification there. They can pick out either juniors, they can do small deals with juniors, they can do large deals for cash flow. They don't leverage up their balance sheet like crazy. And that's why I think that Franco Nevada is the most bulletproof gold stock. However, it is almost never cheap. If there is an enormous stock market crash and everything drops like 30, 40, 50%, this would be, and this, again, not financial advice, just my opinion, this would be one of the major stocks that I would look to go buy a lot of shares of. So if you don't want to pay a high price now, I would keep it on your radar because this is an extremely quality business. They have very few weaknesses, almost zero weaknesses actually, how well this business is run. This is the company that hopefully Sandstorm Gold will grow into in the next 10 years as more and more assets that Sandstorm Gold owns go from exploration to development to advanced development to production and cash flow. Yes, Kirsten, Sandstorm Gold is a royalty and streaming company. Nolan Watson actually invented the gold stream. He did it with junior miners. And then the larger companies, the 4 larger companies, actually copied him and implemented it. And they obviously had more money and resources than Sandstorm Gold did. And so they've been able to drastically grow. And Franco Nevada, I believe in 2008, they only had around $1 billion. I think it was under $2 billion after the crash. Under $2 billion market cap, and now their market cap's $14 billion. And it was as high as $16 billion. So despite the main point I wanted to make is once there's a lot of assets online generating cash flow and there's a good growth pipeline, that shareholders get rewarded. And look at the gold price over the last, let's just use 2013, because when I was working at Investing Daily, when I was an investment analyst there and doing research for their different portfolios, and for their most expensive stock newsletter, which I think was $2,000 permanent membership, and then they charge some type of annuity, like an annual membership fee. And I was talking with my buddy who was running that portfolio. He had the office across from mine, and I was telling him about Franco Nevada. And at the time, in 2013, when the gold price was going down, Franco Nevada back then was between $33 a share to $45 a share in 2013. I looked it up on the stock chart. So even though the gold price has done very, very little since then, Franco Nevada has gone up a lot and your dividend increased. So Franco Nevada, as of right now, is just under $75 a share at $74.60. So if you had bought shares of Franco Nevada and accumulated them in 2013 and just held, not only were you paid a dividend, that was increasing every year, but you also basically more than doubled your money. And so that's the type of business that you want to, rather than with the regular primary gold and silver miners. Let me give you additional examples of this with the problems in the industry. Besides the reverse stock splits, the share dilutions, the bad acquisitions that can occur normally at the top of the market, you also have situations now where the oil price has rallied. And when the oil price rallies 20% or so in a short amount of time, that's going to, and you're going to see this probably more in the Q2 2019 numbers than the Q1 numbers, because the Q1 numbers, the oil price was still low for a little while in those numbers, but maybe you'll see some of these when the miners are reporting their Q1 numbers on the conference calls. But you're going to see the miners, with the oil prices and diesel prices rising again, their margins are going to get hurt. And the royalty and streaming companies, as long as they don't have too much of the revenue of an individual mine, so if they're not taking like 50% of the revenue or some exorbitant number, they do not get hurt by oil price increases. And they are people, I've mistakenly heard a lot of very smart people in the gold community call the royalty and streaming companies parasites, and I totally disagree. They're actually publicly traded private equity companies, and they're actually very, very flexible with willing to work with their mining partners. So if the mine is not doing well financially, they're willing to amend the contract. You cannot say the same thing with the banks who have debt loans out for a lot of the miners. So I think the royalty and streaming business model, and there are 5 large ones and a couple small ones. You may see some of the smaller ones get bought in the near future or merge. It sounds that the other major thing that I'm seeing too in the gold and silver mining industry is the price that not only the larger royalty and streaming companies and also the smaller ones now that are merging, but also private equity, are willing to pay for some of these new royalty and streaming deals. I mean, deals that are mediocre to bad are selling for like $70 to $90 million now. Deals that have an enormous amount of risk and could end up having to be totally written off to zero. And there's bidding wars for these deals. And then for the larger deals that maybe in the past would have sold for $100 million are now selling for, in a bidding war, they're now selling for over $200 million. So I think the business model that Sandstorm Gold has, they're trying to do deals but avoiding bidding wars. So I'm not saying Sandstorm Gold's perfect. There's a lot of risks involved. The geology that they've gotten the deals on in their growth pipeline is incredible. The market is not pricing in a lot of their future growth. Rick Rule said when he was at PDAC recently on a BNN Bloomberg, a long interview there from PDAC, he said that Sandstorm Gold is probably his favorite gold stock, and he thinks that the Hot Maden asset is not priced at all into the stock. And I would say that a lot of Sandstorm Gold's other assets over the next 10 to 14 years that are already paid for, there is little or no additional capex, those are not valued at all in the stock either. So they have basically 10 to 14 years worth of growth that's already paid for, assuming no other new deals. And the market's valuing those, all the stuff in the growth pipeline, at zero. Jupiter Nugan asks, isn't Franco invested in fracking? Yes, they just did a deal, but it's not a massive part of their portfolio. So they have mostly gold exposure. I could just take a look at their investors presentation really quick, but I believe that the majority of their cash flow is still from gold. So let me just check it real quick. Oh yeah, it's on their website. I was looking at their investors presentations. Yeah, so their revenues are still 66% gold and 16% silver. Oil and gas right now is only making up about 8% of their revenues. So this is a smaller bet for them. They didn't bet the whole company on fracking. They're still overwhelmingly gold and silver. They may have to write off the fracking stuff because I think there's immense problems with it, but we'll see. But overall, it's not going to kill the company. They very rarely use massive amounts of debt in their revolving credit facility or elsewhere. And if they do use that debt, it's almost always for near-term cash flow so they can pay back the debt quickly. The management team at Franco does not like a leveraged balance sheet. Okay, well, that's pretty much all the stuff I wanted to cover for, let me see if I covered everything that I wanted to cover for Franco Nevada. So the business model and the management team are the keys. The business model is so much more efficient than primary gold and silver miners. So if the gold price and silver price go a lot higher, you may get a lot larger gains on primary gold and silver miners than a royalty and streaming company that's better run and more efficient. However, you are taking on more risk. So the professional finance terms that are used are risk-adjusted return. The royalty and streaming companies offer by far the best risk-adjusted returns. But if you're willing to take on more risk, if you're not professionally managing money, because if you're professionally managing money, you get looked at very, very badly for taking on too much risk, even if you produce the returns, because they say you can't duplicate it. Especially if you're a value investor and you start buying gold mining stocks. I have friends with Eric Cinnamond, who was the top small cap value fund manager for years, and he started accumulating gold stocks when there was blood in the gold mining stocks when there was blood in the street in 2015 and 16, and his investors were calling up every day screaming at him, calling him a freaking moron, even though he made a lot of gains, and they said it'll never be repeated, you should never buy it again, and he basically handed back his money and quit after that because he just got fed up. So, this is not financial advice, but one of the main things besides talking about how Franco Nevada, I think, is the safest gold stock for a lot of different reasons, that you cannot buy and hold a mining stock, a producing mining stock that has a couple different mines throughout the entire cycle. You cannot just buy 2 or 3 different mining stocks and hold them, individual mining stocks, and hold them throughout the mining cycle, because there's always something that can go wrong at a mine. The management team, as I've illustrated in many of my different podcasts and shows and interviews, and also in this show, the management teams can royally screw things up, or unforeseen things can happen, like the oil price could rise a lot, the metals price could crash. If the metals price goes up too high, then the governments in some of these countries that have mines could get greedy and start to try to steal all the revenue from the mine or try to confiscate it. You have situations like that going now in different countries as well. Even though the gold and silver price really isn't that high, you have the country who wants to renegotiate the terms for mining companies. I think even Mexico has been doing this in the last couple of years. This is a superb question from Nicholas. Where are we in the mining cycle? I would say that we're not on a full-on bull market. I would say we're going sideways. So we've had false breakouts in the bull market, and I don't think we're necessarily in a bear market. I just think we're going sideways with a lot of chop and a lot of volatility. And this is a type of market right now where a lot of the mining companies cannot raise capital. And this is why you see opportunities with the deals that Sandstorm Gold just announced, like the $40 million deal to restart the Relief Canyon gold stream. No, isn't it true for all stocks? No, I think the resource stocks are most dangerous because they cannot consistently generate free cash flow. In fact, I think with a lot of the mining stocks and resource stocks, things are so bad in a bear market that they actually destroy immense amounts of capital. So they can't even earn their capex back. If the metals prices would have stayed, and this is the mistake that gold bears like Harry Dent make, they don't understand the mining part of the industry and the supply side. And they don't understand that basically supply was close to collapsing. So Harry Dent, who repeatedly every single month says that gold is going below 800, below 600, even below 400 in some cases, when he says things like that, he does not understand the supply side for gold and silver. That basically you would see the miners going bankrupt way before that. And in the part of the cycle, first of all, the royalty and streaming companies benefit from all parts of the cycle. There's a superb interview with Pierre Lassonde about this they just adapt the types of deals they do. So whether they do deals with juniors for new mines, they probably, if the gold and silver price are going a lot higher, they probably don't have to do deals with a producing miner to repair their balance sheets. But in a bear market cycle, when prices are going down, or in a sideways market, which is the choppiness and volatility and basically sideways gold price we're having now, this is a type of scenario where a pretty large royalty and streaming company, or a larger one, has the opportunity to either help repair the balance sheets of a producing miner, or a miner with a good project, a new mine that's economic, can't raise all the capital it needs from banks and equity to build the mine, and so the royalty and streaming company can fit in that tranche. Nicholas, Harry Dent may be crazy, but he's also rich. Although his track record is really bad, and it's mostly about him selling fear porn and marketing. I believe he had 1 or 2 correct market calls in his 30-plus year career. Gypsy Tree asks about share buybacks to miners. Well, normally, Gypsy, the miners have such poor balance sheets that they do not have any free cash flow to do share buybacks. There are rare instances where the gold price was going up and silver price was going up, and some of the miners did some share buybacks, but any of the ones that took on debt just made their balance sheet really, really bad. And when the cycle went to a bear market cycle and the prices crashed, the miners were in big, big trouble. So the bottom line, if you hold the miners throughout the cycle, you're risking the miner having problems, either major screw up from the management team, or big operational problems at the mine, or nowadays, because geology is so bad at many different mines, that all the low-hanging fruit is gone, and almost all the good mines that have good project economics, fairly low all-in sustaining costs, and good exploration upside are all in developing countries now. Eventually, guys, 10, 15, 20 years from now, those mines are going to be depleted too, and they're going to be looking on the ocean floor for grade. I can tell you right now that there's projects on the ocean floor that Nautilus Minerals, and I'm not recommending them as a stock. I would just watch that company because they've been trying to secure the mining rights for this, but Nautilus Minerals has projects. It's definitely not a good investment right now, but I would just monitor and watch the company. But there's projects on the ocean floor, like in Papua New Guinea, that Nautilus Minerals wants to mine with their deep water mining ship and other innovative technology that has like 11% copper, 20 grams per ton gold, 50 to 100 grams per ton silver, just much higher grades. 11% copper, let's put things in perspective. So 11% copper is 10 times higher than the copper grades we have now. A lot of copper mines right now are lucky to have 1 or 2% copper, and in many cases, it's even worse than that. So that's like percentage of ton. So out of the whole ton of rock that they're moving, only 1 or 2% might be economic copper. That's bad. That's how low the copper grades are now on land. And we're now down. So in the 70s and 80s gold bull market, the average gold grades were about 20 to 30 grams per ton, sometimes as high as 40 to 50. But now we're down to 1 or 2 grams per ton. The average mine now, because a lot of gold mines are now open pit mines, the average gold grades are about 1 gram per ton. So we are really scraping the bottom of the barrel, and we are using, as Steve St. Angelo shows in his great articles, we're using massive amounts of technology and trucks and running the trucks and the mine 24/7, 365 to get like 1 gram per ton gold and very, very low copper grades. So 10 years from now, the mining industry is basically in a crisis because it cannot adequately replace all of its mined economic reserves right now. But 10 years from now, it will be even worse. So people are calling it peak gold, but it's more of a function of price. Because if the silver price goes to $30, $40, $50 an ounce, there will be more economic mines. If the gold price goes to $1,500, $1,800, $2,000, there will be a lot more economic mines. But if the metals prices are manipulated and do not start to rise, especially when the oil price is rallying, the mining industry has major issues. Because the mining industry, and I've stressed this a lot, does not have really any more room to cut costs anymore. And now you have a situation where other costs are starting to rise and the oil price is starting to rise. So something's going to hit. This is like the unstoppable force versus the immovable object over the next 5 years. Hey, Charles, I didn't pick out a cartoon for today. I just have a picture of Franco Nevada. Because that's... I think if you do your research... It's not a cheap stock right now, but if there is a stock market crash, that is one of the... This is not financial advice, but that is one of the first companies I would buy. It is a superb company. Almost no flaws. And they do have a lot of growth, although they're getting so big, it's going to be tough for them to grow very quickly. So, but they'll be able to grow at a reasonable percentage. What you'll probably see Franco Nevada do over the next 5 to 10 years is you'll probably see them maybe try to do an acquisition of one of the smaller, medium-sized, or even one of the larger royalty and streaming companies. Right now, there hasn't been a lot of... What's the right phrase here? There hasn't been a lot of interest in wanting to... for, say, some of these companies to merge with one another or buy them out yet, but I could see that happening in the next couple years. How is it going in DC this week, Charles asked. Well, it's nice spring weather here. The cherry blossoms are blooming. I just saw Shazam over the weekend. I thought it was a pretty good movie. I already pre-ordered my tickets to Avengers Endgame for opening night in 3D. So I'm excited about that. I don't want to talk about my dating life. But, this is not really going to be a global macro podcast, but there's just so many depressing stories with whether it's the former UN Undersecretary General calls for one world currency, or the head of the Bank of International Settlements outlining a central banker digital currency. So I will touch on those stories. I just talked about the headlines right now. I mean, it's depressing. But this goes back to the Rahm Emanuel quote and Machiavellian, that don't let a good crisis go to waste. So basically, I guess it's better to know the truth than to be naive and be blue-pilled and not understand what's really happening. But it looks like basically once there's the next global financial crisis, that the elites, the globalists, are going to try to, what's the right word? Convince. They're going to try to convince the majority of people out there that, hey, it'll be easier if you just pay with your smartphone and we ban cash. So then you don't have to carry cash around. And then, hey, we'll just put a VAT tax on everything. The new normal is taxes going up. So even if there are years where everything crashes and there's deflation for short amounts of time, please name me a city or state in the United States where taxes are not going up. Okay, I pay attention to a lot of these things. I see the news stories. I have friends now all over the United States and the world because of this podcast, and I just hear crazy stories from friends about all these new taxes being layered on, whether it's 5% here, 10% there for food, or all these other taxes. And then, this tax? They just increased this tax 8% or 10% or something like that. This is the new normal now. And the majority of people in the financial industry, the talking heads on TV, they are not talking about the tax increases at all. I don't have an opinion on Sandridge Energy. I have not looked. Also, I saw a question there about the Chevron deal with Anadarko Petroleum, so I can't comment on that. Some of these large acquisitions, guys, normally backfire, so they may look good on paper. So the management teams of the larger company that needs the growth say, all these things make sense and the deal should work, but look at the deal that Barrick Gold just did with Randgold Resources, how it was supposed to be good, and now there's 5 years of additional pain and problems. And now the supposed superstar CEO, mining CEO that the chairman of Barrick Gold brought in from Randgold to run Barrick Gold, he doesn't even want to be there for more than 5 years, and he has to have a very, very serious heart surgery procedure. And he's already talking about replacing himself with another successor. So basically, I think he thought that the merger was going to go well, saw all the problems, and said, I need to get the fuck out of here. And yes, he needs the heart surgery, but sorry to cuss, but I'm sure he said the exact same thing I'm saying now. That when he took a look at the books at Barrick and all the operational problems and that stuff, said we can't cut any more costs, we have too many large mines that need capex, and said, I don't want to be here 10 years trying to turn this around. Kirsten, yes, Sandstorm Gold is a royalty and streaming company. They do not mine. There's only about 15 or 20 people at the company, full-time employees. And they have two full-time, they have, I think, 4 full-time geologists now. They had 2, and I think on an interview last year, I interviewed Nolan Watson 4 times last year, I think. And in one of the interviews, he said they just hired another 2 full-time geologists. So they have 4 full-time geologists. They also have consulting geologists that they pay per job or to potentially bring them new royalties or deals, looking for opportunities for them. So they have a much better investment checklist than they did in the past. There's a bunch of idiots on Seeking Alpha. Some of these guys spend hours and hours, right? Some of these articles are good on Seeking Alpha that are written, but a lot of these guys unfortunately spend hours and hours writing these articles and then don't make any money from it. I don't know if Seeking Alpha just steals the money or what, but then in the comment section, they always say really nasty things about Sandstorm Gold and they don't really know anything about the company. They always bring up like the Nautilus Minerals deal, how like, oh, it's the same management team. Not exactly, because they brought in 2 full-time geologists after that deal went bad. It was only a $40 million deal that went bad. In the whole perspective, Sandstorm Gold almost has $1 billion market cap. It's around $1 billion now. And so here you have 7 years later, these idiots or sore losers or immature adults or crybabies talking about something 7 years ago like it just happened yesterday, acting like no one learned anything from it. I can tell you, I speak with the Sandstorm Gold management team. You've seen listened to the interviews, that a lot of things have changed since then. They totally changed their due diligence process. It's a lot more thorough. They have full-time geologists on staff that are very experienced with building mines as well. They even have a full-time guy on staff that has like 30 or 40 years experience at constructing mines, so he can outline the risks. Yeah, Douglas, you got it right about Venezuela. John Bolton, it looks like Trump has delegated things to John Bolton, who's like Mr. Evil Neocon. And Bolton supposedly admitted that they want the regime change for the oil. There's going to be an oil supply problem in the near future. And Venezuela was producing 4 million barrels per oil, and now it's down to, I think, it's below 1 million. I believe I saw some research a month or 2 ago saying that now it was only 500,000 barrels per day of oil. So it went from 4 million barrels per day at its height down to 500,000 now. Total collapse. And you can't blame the United States for that. You can't blame capitalism for that. It has to be socialism, and I'll tell you why. Venezuela did not reinvest any profits into their oil industry. They also, Venezuela, did not reinvest any of their profits into their water utilities, into their electrical utilities, into their hospitals either. Okay? Talk to people who actually lived in Venezuela, not the socialists who are saying that Venezuela wasn't real socialism. The people in Venezuela who lived there, who escaped from Venezuela, will tell you that the hospitals, the water utilities, the electrical utilities, and the oil industry have been decaying and becoming decrepit for over a decade. Okay, guys, well, that's pretty much it for today's episode. Maybe I'll do a global macro show later during this week. And I'm still working on other interviews. I did speak to an employee for Kyle Bass that works for him, and I'm working on getting an interview with Kyle Bass, hopefully in the next month or so, and other good interviews. I've had multiple reschedulings done with Sir Pensa Winston and Lao White 86 Matt for an interview about their experiences in China. So I am trying to get other guests booked, and we'll work on that. Okay, everyone have a great week, and and maybe try to find something a little less stressful if you've waited till the last minute for tax day. Okay, bye.